Hello everyone, my name is Vikas Agrawal and I am the founder of Altport. Altport is our new brand name. We are basically an expert in alternative investment funds and portfolio management services. Well, when I laid down the foundation of this organization in 2020, as I talked to you, it's been about 5 years. We've realized that we did what not in order to educate and empower the investor community. So our purpose is to create content around alternative investment funds and portfolio management services to an extent that it should really help all our investor community to take right decisions, because this particular industry is highly scattered, and I see that there is a lot of requirement in terms of educating and empowering the investor community, and we see a lot of scope. So therefore we keep organizing these knowledge-based sessions, and we call it Ask the Expert Show. So with me I have someone very special in Ask the Expert Show. So let me welcome Sugyan, my good friend. So thank you so much for taking the time out.
Thank you for having me here.
Right. Let me just give you a little bit of introduction about Sugyan. So he heads the entire Western market for Motilal Oswal AMC, which includes both the mutual fund piece as well as alternative investment funds and portfolio management services. Well, I know Sugyan because we had a chance to work together at Motilal Oswal, one of the most passionate, knowledgeable, and I would say very, very focused personalities. I would say Sugyan. So a lot of compliments to you for doing a lot.
Thank you, Vikas, and compliments to you for being an excellent mentor to me.
Thank you. Right. So today we thought, I have requested Sugyan to take out about 30 minutes to give us perspective about what's happening in GIFT City. So today's agenda is to decode what is happening in GIFT City funds, A, and B, also try to, read your mind in terms of what is the trend that you are witnessing as a manufacturer out there, and how do you think it will shape up. So let's start with that first, and then I'll keep asking you questions.
So because GIFT City came up just about a year back, and within a very short period of time, now there's more than 7,000-8,000 crores of assets which has already been collected. There are 300-400 registered funds already. Some of them are already fundraising, but most of them have achieved their licenses. Till now, there was a big vacuum in our industry for NRI Indians as well as foreign citizens and investment vehicles like companies or partnerships to invest in Indian equities. Mm-hmm. The biggest gap was that there was a lack of a favorable regulator who understood the mind of the overseas investor, and also that investments had to go through Indian KYC norms, which were very difficult to comply with.
Even when it used to be based out of Mauritius.
Correct. Okay. So you had a lot of these pools of investors getting together in countries like Dubai, Singapore, Mauritius. Yet the level of efficiency was not being able to be achieved because of the norms which had to be followed in India. So we had an industry which was languishing and was not being able to reach its potential. About a year back, the government announced the birth of GIFT City, which is a SEZ for financial investments in India, with the idea to pull all this investments which is happening through foreign countries onto our own soil. And along with the birth of GIFT City came a new regulator, which is IFSC, which is very pro investments and understands what are the basic requirements of any foreign investor to send US dollar into India. Now all the
transactions are in dollar term.
Yes, it can happen in multiple currencies, but vast majority is happening in dollar.
People opted for dollar.
Absolutely.
Base currency.
Absolutely. Now, for example, for an investor who comes into GIFT City, he does not have to give Indian KYC documents.
Mm.
Right? Foreign KYC documents is enough.
Sure.
So for an individual investor, you're literally giving me one ID proof like a passport,
Mm.
your address proof in your home country, which you would have multiple options for, your banking proof, and that's it.
Right. No, so how to understand before we get on to how onboarding of the client has become so smooth. I
Yeah,
also want to understand what kind of trend that you are witnessing and how these NRIs are excited about utilizing the
absolutely.
opportunities of this
Yes.
GIFT City route. Number one, and do you think that we really have to do a lot in terms of creating the awareness?
Absolutely. So for the NRI investor today, he was having to sit on the sidelines and look at his country grow. So it was a matter of pride, but not participation.
True.
Now what is happening is that a lot of the Indian investors living abroad who are hearing about GIFT City being born and the ease of it
Mm.
are coming forward themselves to participate in
Sure.
our growth of Indian equity markets.
Mhm.
In a 1 year period of time, Motilal Oswal AMC has
Mm.
got about 2200 crores of AUM coming in GIFT City.
Cool.
And
It's a big number.
absolutely, and this is growing at an exponential rate.
Mhm.
Currently, there are multiple offerings which are there in GIFT City, which is attracting different kinds of investors.
Mhm.
So, for example, we ourselves have one AIF offering
Right.
which we call Founder Strategy.
Founder Strategy.
But along with that, we also have a mutual fund offering
Mhm.
through a fund of fund route
Mhm.
in GIFT City, where we have positioned our flagship mutual fund as well.
So I want to talk about that also. But before that, what you rightly said. I was just reading a data point somewhere that the total, what is the total net worth of the
Hmm.
people who are NRIs? You know, their total
That
size
number is
is
staggering.
as good as the total size of our GDP.
Absolutely.
You would be surprised to notice that the total net worth of these people is in the north of $4 trillion.
Correct.
And they're all excited, what you rightly said, that they're all proud about the way India is growing, but they have not participated. They're
Correct.
not getting enough. Through this GIFT City, they're equally excited to participate in Indian growth story
100%.
through our capital markets. And so that's where I want to come back to you in terms of understanding how easy it is for any NRIs to think in these lines, and then execute the transaction. How easy it is.
In fact, the ease of participation is what is growing this industry at this point of time, because that is the plug which needed to be done.
Sure.
Out of this 4 trillion number which you have mentioned, 2 trillion is in financial assets alone. Right? So another 2 trillion may be fixed assets like real estate.
Okay.
But in the absence of the right investment products or just the FCNR deposits through banks being the only attractive option in India, the Indian capital markets were not getting the right participation from our citizens living abroad. Today, the ease is so smooth that sitting in any country abroad, based on an email application, our investor can get onboarded in a matter of 4 to 5 working days.
Oh wow, it's that easy?
Absolutely.
So within, you are saying that essentially the turnaround time is about 4 to 5 days.
Yes.
And you can onboard the client and get about funding, and
Absolutely.
the money will start working.
Absolutely.
I see.
Yes. So the not having to go through the Indian banking system has really shortened the turnaround time. Because you don't need to get in touch with your domestic bank branch, transfer the money from your home currency to INR. That also used to attract a charge to the investor, right? A currency conversion charge.
Right.
And then reactivating the domestic bank accounts to then further transfer money to the asset management company. That journey has literally become a transfer through SWIFT transaction from the home bank account directly to the scheme bank account in GIFT City.
Okay. So you're essentially saying that now you sitting in Kenya or Australia or maybe South Africa to
Yes.
participate in Indian capital markets.
Yes.
You just reach out to manufacturers or distribution houses like us, take the advice and go online, get the onboarding done and start funding.
That's exactly true.
And money will be in dollar term, and the way money will be returned is also in the dollar.
Absolutely. And you
Fantastic.
don't go through the Indian banking system.
Right.
However, I would highly advise for investors today sitting abroad to go through the advisor network, much like yourself, because as I said, already there are 300 plus licenses given out in Gift City.
Right.
So the right choice, the right manufacturer, fitting the right requirements of the investor should be filtered through by the right expert advisor.
Right. And within what a matter of 12 months, you're saying that the size of the industry is almost $1 billion.
Yes, it is.
So that's something amazing. So a lot of good work is happening there. I
Absolutely.
want to read your mind because you're a manufacturer yourself, as to understand that which are the countries that or the people that you are witnessing that they're coming and joining
Yes.
your fund at
Yeah.
Motilal.
Yeah. So I would group that into 3 different cohorts. One is the countries which don't have any capital gain tax in their home country. Like, so all your Gulf countries come in over there, or a Singapore comes in, or Luxembourg comes in, or a Thailand comes in. The second group of countries is where you have global taxation requirements. So that would be your USA, it would be Canada, it would be UK, and there are many other smaller opportunity countries which have to be taken care of in terms of the global taxation requirement. The third set of countries are those where we have multi-generational Indians living. And a lot of the African country network comes
So they're
in
born
over
there and
Yes.
Okay.
Yes.
The second or third generation.
Mostly second or
Second.
third generation, and they have built tremendous amount of wealth. Their industry, their
Sure.
businesses are doing very well.
But they are Indian origins.
They are Indian origin, and patriotism is towards India. They track India very closely.
Sure.
It's a matter of national pride
Oh,
for
yes.
them to invest in our capital markets. But over there, the penetration of information may be even far lesser than what a USA resident would be getting. And once you have all 3 cohorts of countries actively participating in the Gift City offerings, this industry is set to become multifold from here. And let's not forget that till now we have just spoken about the Indian diaspora. Gift City equally invites foreign citizens. And Gift City equally invites investment vehicles. These may be investment trusts, they may be corporations,
Pension
they may
funds.
be pension funds, they may be sovereign funds. And institutional money is yet to make a big entry into India, but majority of that will also be routed through Gift City.
Are you also referring to FPIs? These FPIs
Yes.
will also eventually follow the route of the Gift City in order
Yes.
to invest in Indian market.
Absolutely. It's just a matter of short period of time till you get some very big news of these institutions entering India.
Nice. Okay. The other thing I want to, it reminds me to talk to you about one of the most frequently asked question from most of our NRI investors are how the taxation is done at the fund level.
Yeah, absolutely. So again, I would say there are 2 different types of funds following 2 different taxations within India, and you can bucket them as AIF, or you can bucket them as mutual fund, fund of fund. When you come to AIF, then as the law is in India, that AIFs have to pay tax in India on the gains made in India. Right.
Okay.
So the underlying fund itself will be regularly paying tax to the Indian government
Both short term, long term, everything at the fund level.
at the fund level at the same rate as you and I would pay from our own personal demat account gains. So that's 12.5% for long-term capital gains, 20% for short-term capital gains. The biggest advantage is that here the investor is not bothered about having to pay annual taxes in India. In fact, we are not even asking for PAN card of the investor at the
Correct.
time of investment, which shows you that the Indian tax component is completely taken care of by the fund.
Sure.
Then the monies which is returned is tax paid in India, and it comes with a tax letter. And for US investors, that tax letter is called K1 certificate, which shows how much tax exactly is paid
Already
under which
paid.
header to the Indian government.
Because of the arrangement that we have with US.
With almost every country. India has double taxation avoidance treaty with every respectable country in the world at this point of time. So an investor will never have to pay tax twice on the same gain.
So this certificate that you are referring to will have a sort of exact numbers in terms of how much is the gain, which is, and how much the tax which is already paid at the fund level.
Absolutely.
And what is left out according to their own country, their rules.
Yes.
In terms of their
The
category.
differential amount needs to be paid in their own country. Let me elaborate by taking the example of a US investor.
Sure.
Now, US as a country deters their investors from investing in unrecognized products. It's their way of protecting their citizens from investing in funds which are risky or dangerous for their wealth creation. So they categorize these funds as PFIC, right? Passive Foreign Income Company. And they don't want you to put money in PFIC funds. Therefore, there are two very strict parameters to follow in taxation. One is that it's taxed at the highest of highest bracket, which is 40 to 42% plus. The second is they want tax on unrealized gain.
Okay.
So clearly they don't want you to put your money in PFIC funds. Right? What's happening is that if we talk about Motilal Oswal funds here, then we have registered our funds in the US.
Okay.
There is a particular filing called 8832, which has been duly done by our auditors and our operations. And by doing that, my funds are now non-PFIC.
Okay.
So they are recognized in the states.
Okay.
So I can firstly officially issue a K1 certificate as we discussed. Second is that the tax is not to be paid on unrealized gain anymore and only on realized gain, which is the financial norm across the globe. And third is that the 42% almost penalty type rate is no longer applicable. The investor has to pay tax as per their income bracket in the US. Now, the tax rates in the US, I was studying the IRS website. In India, on long-term capital gain, we pay 12.5. For an investor who earns about $500,000 annually in the US, the long-term cap gain is only 15%.
Okay.
So for the long-term capital gains accrued in India through the AIF fund, 12.5% is paid here, and just the differential amount based on the K1 certificate needs to be paid to the US government.
Okay.
It's become that simple and that easy.
This is for US, mainly US based.
Yes, this is for the
But
US
for clients which are based out of Gulf countries like Oman, Dubai,
yes,
they don't have to pay any taxes.
absolutely. Therefore, the second type of product is far more favorable for them, which is the fund of funds.
So what is that? Can you elaborate that here?
Absolutely. So, firstly, we must recognize that in the Indian investment scenario, mutual funds have a very favorable taxation regime, which is what we refer to as pass-through taxation.
Absolutely.
As the fund does not have to pay tax to the government, it's the responsibility of the unit holder.
Yeah.
Here we have a master fund concept where the Gift City fund is called the master fund, which collects as a pool the money from all the investors. The job of the master fund is just to buy the units of the Indian mutual fund which exists in the market. Right? So the underlying mutual fund scheme is passed through. They don't pay tax to the government. So the entire money is realized by the master fund. Gift City is not collecting taxes. So then the entire funds without any debit of tax is getting passed on to the investor's bank account. And as you said, if the investor is coming from a zero cap gain country regime,
Mhm.
then he does not pay taxes there as well.
No, but what about the long-term taxes of the units in India?
It is not paid
Oh,
in this special situation what we have discussed, because at every level there is zero tax collection.
mhm. So you are saying that essentially the master fund will not deduct any taxes,
Correct?
but if the investor is based out of US, then they have to pay the
Yes,
differential
absolutely.
amount or whatever is the full amount of the
Yes.
taxation. If it is long term, then he has to pay 15% according
Yes.
to their own
Yes,
country rate.
yes,
But if someone is from Gulf city,
yes,
Gulf countries, then they don't have to pay any tax.
absolutely.
Neither here nor there.
Absolutely. So they enjoy their home country zero tax regime while investing in India.
Wow. And what about, okay, so you're saying that they don't have to pay here, they don't have to pay there,
Correct?
and money will be what? Again in dollar term?
Yes. So every AMC can take their own call. For example, we accept only US dollar
Mm.
as investment, and we return back also US dollar.
Okay.
And what we must recognize is that currency conversion is a tedious task for us in India, you might agree. But in foreign countries, it's a very run of the mill activity.
Mm.
And conversion from, let's say, a dirham to US dollar is very simple. In fact, Dubai residents are allowed to have a USD currency bank account altogether. Even conversion from a Singapore dollar to US dollar is considered to be a run-of-the-mill activity. Even pound to US dollar conversion, or the fees, the ease, the speed is very simple.
Okay.
So US dollar may continue to be the primary currency of business and Gift City for the foreseeable future, till we have some major countries participating and individual AMCs taking different calls.
Okay, okay. So just to summarize, that what we discussed about is that either you can invest in these AIFs, more particularly it's founder funds in India for
Yes.
Motilal Oswal.
Yes.
So similar portfolio, it's a kind of replica of the founder fund PMS that
Yes.
you run in India.
Absolutely.
Similar strategy is being available under the Gift City platform,
Yes.
and any investor, for even the foreigners, can come and participate in that.
Absolutely.
So that's one way of doing it. The other thing, you're saying that you have a master fund for mutual funds, and within that master fund you're picking up large cap, mid cap, small cap, whatever.
So for now, what we are offering is our large and mid cap mutual fund scheme.
Only one scheme
Yes.
at this point of time.
At this point of
But
time,
you're not doing multiple schemes.
we will.
Okay.
We are very focused on growing our bouquet of products in Gift City, and you will hear a fund of fund format what you have described
Sure.
coming up very soon.
Okay.
Large and mid cap as a category actually captures the market in the best possible way as per us, as the SEBI requirement is that 35% of the portfolio always has to be in large
Large cap.
35% of the portfolio always has to be in mid cap, and then 30%
Can be
becomes
anywhere.
open for the
Yeah.
fund manager to decide where
Right.
best
Right.
should he allocate. As we said today, the allocation is about 35 large, 40 mid, and 25 in small. So the way we are running our large and mid cap fund is that it's one single flagship fund with a AUM size of about 1.5 billion dollars, with more than a 5-year track record, giving great returns to our existing investors and capturing all three different market
Sure.
opportunities,
Right.
large, mid, and small.
Right. So Sugyan, we come to the end now. So my last question to you, because this is the most important question.
Sure.
That can you also talk to me about what kind of returns one can expect? What has
Sure.
been the track record of the fund that you've ever since launched,
Yes.
and some of the peer group which has been there in the industry for the last 5-10 years?
Yeah, absolutely. Let's talk first about what should a client's expectation
Right.
be, and I'll answer this slightly differently.
Sure.
Such that the investors also have the right perspective from India. See, going forward, because you may agree that we are expecting a 6 to 7% GDP,
That's right.
and this will continue for the foreseeable future, like 5-10 years.
True.
Right? It's not a short-term growth which India.
It's a new
is-
normal for us. That
Absolutely.
6.5% is what is expected.
Exactly. Now, our inflation data is also about another 5-6%.
3.5%, 4% to be very precise.
Um,
Both put together, the nominal GDP is below 10.
I would actually, our numbers put it at about 12.
Okay.
Yeah, so 6.5 from the GDP side and 5.5 from the inflation side.
Okay.
Being a high
From a
growth
long-term
economy,
perspective.
yes, being a high growth economy, I'm not expecting inflation to taper off.
Sure.
What will taper off is currency depreciation. That will come down from the current 4.5 towards the 2.5, 3% mark.
As we move forward.
Yes, but high growth comes with moderate inflation. So it's not a bad thing actually. Putting our nominal GDP at about 11-12%.
Okay.
Now, if entire economy is growing at 11-12%, my question is, when we talk about the top 500 companies of India, which is Nifty 500, similar to the S&P 500 in the States, can our creme de la creme 500 companies deliver 2-3% higher profit growth than the entire general economy put together?
Doable.
Absolutely. Also on conservative basis, we have India corporate earning growth at 14-15%, sustainable for a decent amount of time. And then working backwards, we are strong believers in the fact that stocks are slaves of earning.
True.
Stock meaning stock price, slave meaning completely dependent upon and very high correlation to earnings, which is the profitability of the companies which we are investing into or tracking as part of an index. So
essentially you're saying that the realistic expectation should be around 15%.
15%. Then you have your active fund managers like Motilal and many others, our peers in the industry, whose job is to create portfolios which can deliver alpha. On a post-fees basis, of course, if money is been given to an active manager, the investor will be in his right to expect a few percentage points higher return than the benchmark itself.
Okay.
But after 15%, as you can imagine, in the power of compounding, every single percent coming in on top of that leads to much higher wealth creation, even for periods.
So what would be the
5-7
dollar term
years.
return? Because if it is 15% in INR term,
Yes.
or 16%,
Sure.
then it will come down to about 11.5%.
You're absolutely right. And having that expectation will not be wrong for an investor. It's highly sustainable. It also leaves room for the investors to be happy with results when asset managers do better than that.
Right. No, but there are countries, there are investors who might compare their past returns, but let me just explain that. Look at the kind of growth India has vis-a-vis some of the other countries. So there also the numbers are coming down, and here also numbers are coming down. So
Yes.
therefore, I think you need to set your expectation right at a first go, which is very, very
I
important.
want to add to what you have just said.
Right.
Like in equity markets and in stock selection, we are more concerned about how the profits will go from here onwards, right? Because the results which have been announced are already in the price as you
That's
speak.
right.
Markets are very efficient. Now take that idea and start applying it to the GDP of countries. If we put a round number to global GDP, let's call it 100 trillion.
Right.
Okay. When we talk about the growth of this 100 trillion over the next 5 years up to 2030, the largest contributor to the growth is China at 23%. The second highest contributor to global growth in the next 5 years is India.
True.
At 15%. The third highest contributor is the United States at 11%. So the 11% number of contribution to growth is coming from a base of more than $30 trillion GDP. It's very underwhelming in terms of their contribution to the future growth.
Right.
While India at 4 trillion, which is 1/7 of the US, is delivering more growth than the US country put together. As investors, we need to look ahead and have a vision towards where is the future growth going to come from, and once you align as an investor towards that growth, you'll see your wealth creation journey becomes far easier, smoother.
Right.
Uh,
So coming back to the same question, so before we conclude, what has been the actual number so far
Absolutely.
of your funds?
So the founder strategy is about 2 years old, and it's delivering 25% CAGR returns in USD terms.
Wow.
In 1 year, Indian markets are negative while the fund is flat. In the large and mid cap fund, it has completed 5 years.
Mhm.
In 5 years, the investors have got more than 25-26% CAGR in USD terms.
Not in INR terms.
Yes, right now I'm quoting USD. And in the last 1 year, our large and mid cap fund has done 6% positive while Indian markets were negative.
Amazing. And here we are talking about expectation of 12 to 13%.
Well, having moderate
Dollar.
expectation is one of the keys to success.
Excellent, excellent. Great. It was pleasure speaking with you. Thank you so
Pleasure
much
was
for
all
taking
mine.
the time out from your busy
Thank you
schedule.
for having me.
Right. So just want to conclude this session. I want to thank all our investors for giving us your patient hearing. Also trying to understand how the Gift City really functions. If you have more questions, please feel free to reach out to us. The mobile number or the email ID will also be mentioned. The same YouTube channel. You can visit there. Visit our website and reach out to our team. Our team will help you understand every bit of things in terms of taxation, in terms of how the functionality of the fund, etc. would be, when is the time that a good time to invest or time to book profit, etc. All that will be advised by the team at Altport. So with that, I would like to conclude. Thank you so much.